Welcome to this stock analysis blitz for Chemring. Please remember this is for entertainment purposes only. Chemring are the UK's fourth largest defence stock with a 1 billion market cap. Their net income has been inconsistent the last couple of years, but that's because they sold off their environmental hazards detection business in 2023 at a 32 billion loss, making 2023 a bit of an anomaly. However, their order backlog and order intake have been looking extremely strong ever since Russian invasion of Ukraine, and they're actually targeting roughly a doubling of their revenues to about 1 billion by 2030. They're currently paying a 2% dividend yield. The share price increased markedly at the start of the year, but this was because of a 1.1 billion pound offer from Bain Capital. The bid was rejected and there hasn't been another one coming in. So hopefully you can go into Chemring without this being a problem, but bear in mind there is a risk that you could buy them and then they get taken over and go private soon after. The share price hasn't gone up all that much since the Russian invasion of Ukraine relative to other defense stocks. So there's two parts of the business, which are countermeasures and energetics and centers in information. About a third of this first segment is actually the countermeasures. These are the flares that get deployed by aircraft, but also by naval vessels. And energetics is the jargon that defense companies use for explosives. In terms of the countermeasures, they are currently supplying the F-35 Eurofighter Typhoon and various naval vessels. However, this part of the business has got what's described as weak growth, and apparently some of the US projects they're having to produce at a loss or only at break even because of some issues with the contracting. The energetics part of the business, though, is going extremely strong. They have Chemring Noble, which are based in Norway, and they've actually just recently announced a 200 million capex expansion and also 90 million in grants from the EU and Norway, which will lead to actually a 275% increase in capacity. So, following the war with Ukraine, Europe's realised that its missile and ammunition stocks are woefully low compared to what they'd need to be to defend against Russia. And so that explains why the governments are prepared to pay such a large grant. And so the increase in capacity at this factory looks extremely lucrative for Chemring. They make HMX rocket fuel there, including an 83 million contract with the US company Northrop Grumman. I'm not sure which missile that's for, and also I'm not sure whether it's the warhead or the propellant. I'm thinking it's more probably going to be the actual rocket fuel or the propellant. This is one of the most famous defense suppliers in the world. So that is quite a impressive contract they've got coming out of this factory. They've also got a 12-year contract with Daihe Defence Germany, with the first delivery planned for 2027. And this is for 155mm artillery shells. Of course, Europe was shocked to realise that they need a lot more artillery shells than they have in storage in order to prosecute any war. And Chemring look well positioned here to gain some of that business from all of these shells that are going to need to be manufactured in Europe in the coming years. They also produce RDX explosive, that's used for plastic explosives and bombs. They then have a Chemring Energetics UK business, which is based in Scotland, and they make propellants specifically for the NLAW and some other platforms. And then in Chicago, they have Chemring Energetic Devices. These are supplying NASA, Blue Origin, and SpaceX. And I believe it's the kind of explosive bolt things they have for when they do stage separations. You see that they supply all of these three. They clearly are leading in this market area. And they actually got a 106 million order for a undisclosed US missile program that was announced only in 2024. This year, Chemring announced that the Chemring Noble factory had just won a 251 million UK missile defence system project. So they'll be producing explosives. It'll be the UK's version of the Iron Dome. In terms of the sensors and information business segment, this is split up into electronic warfare systems, which includes detection, jamming, targeting and surveillance and reconnaissance, communications and intelligence management, and then rogue intelligence, which is open source intelligence and AI to provide a intelligence service to whoever wants it. They also have a biological weapons detection business. So it's a little bit more difficult to understand what's going on in this business segment, but some examples are that they have this Resolve electronic warfare system, which is a export product with a 300 million pound pipeline. They also run within this communications and intel management the UK Zodiac system, which is the UK's Army Intelligence Management System. And they are one of 4 candidates who have received research funding to design electronic warfare systems for the latest AUKUS submarine project. They've also just pitched a rogue agile anti-UAV system, which is their own electronic warfare system that they've specially designed to counter drones. So in terms of what they do, Chemring, for me, are far more than any of the other defence companies I've been looking at. They really do address the current changes in modern warfare and exactly the things that Europe's having to improve itself in. If you look at the wars between Israel and Iran, and also the war in Ukraine, future war is about firing missiles and drones to attack your enemy, and then using missiles to defend against those. And Chemring addresses that more than any other defense company with its energetics business unit. It's making the explosives for the rockets to protect against the drones, as well as making some of the missile systems themselves. And then in the sensors and information segment, they are actually producing systems to help detect and counter drones. So Chemring really do look excellent to me in terms of where their focus is. Turning to their profit and loss account, and you can see that their revenue has increased quite significantly over the last 6 years. However, so is the expenditure. The net income's been a little bit stagnant in the last few years. Obviously, 2023 we had this one-off thing with where they exited the US explosives hazard detection business. But even accounting for that, they really are looking a little bit lackluster. You know that I like to see the revenue widening away from the expenditure, and we just don't really see that. We can see that their expenditures dominated by staff costs and cost of expensed inventories. Now, you expect the cost of the latter to go up as revenues go up. So what seems to be hurting them is the increased staff costs. I've created this graph here where we see the revenues versus a breakdown of the expenses, and this will be a good tool for tracking Chemring in the future to see if they can widen that gap at all. What I could say is, if one was being hopeful, they're currently going through a lot of expansion at the moment, and it's often a good year before they start getting a return on some of these new projects. So perhaps that's reflected in the lackluster net income increase. When I look at their balance sheet profile, it's actually a lot more attractive than BAE Systems look like. You can see they've hardly got any long-term debt versus loads of long-term assets. And in the short term, they've got more coming in than they've got going out, in contrast to BAE Systems. So that looks very healthy. So zooming into the current situation, and the current assets are all good stuff: inventory, trade receivables, and cash. Whereas current liabilities is mostly trade payables. So that's a perfectly healthy looking set of books. In terms of their assets, in terms of their long-term assets, and it's mostly property, plant, and equipment. Only a third. You remember with the video I did for BAE Systems, their goodwill was actually equivalent to their net assets, so that wasn't too pleasing to the eye. However, in the case of Chemring, only a quarter of their long-term assets are goodwill. And on the liability side, there's not actually much here, although it is notable that they are carrying about 44 million of long-term debt. Overall, they actually have about 90 million of debt because there's a load here parked in short term. But really, this debt is kind of minimal compared with their assets overall. And they are actually a very neat and tidy, impressive set of books here. So here's my market cap versus value graphic. Since the beginning of 2020, the share price hasn't really gone up much. And you can see that pattern repeated here with their market cap, of course. Whereas the net assets are kind of fairly flat. I've got here with the black line an estimate of the next 5 years net income. And actually that number's kind of gone up a little bit, but so has the share price. So Chemring don't seem to have gone through a revaluation process, the same as a lot of the other defence stocks have. So here's BAE Systems, and you see there's a massive move up of the market cap versus the other metrics. Whereas we just don't really see that for Chemring. They seem to have been a little bit non-responsive. I got some different valuations from various sources, and most of them have Chemring about fairly valued or undervalued. I did my own rather crude estimation, which has them at kind of a little bit overvalued. I've got a little selection of defence stocks, but it only works out about 7% of my portfolio. So it's a small amount I can afford to lose. And I opened up a defence stock position mainly because it was kind of distracting me too much, not being involved. But like I say, with only a 7% overall allocation, it's nothing that can really hurt me. I wouldn't necessarily recommend anyone else buy move into any because they've kind of gone up a lot in the last few years. It would have been good to have gone in a few years ago, when defence stocks were still unfashionable. But out of all the defence stocks, I do really like Chemring. All of the things we've been seeing with Israel and with Ukraine as they defend themselves against Iran and Russia, the whole of Europe and the US is going through a rearming process. And Chemring seem way better positioned than any of the other defence stocks to meet these challenges. They supply the actual missiles that are causing the problems. They supply the missile defense systems that Europe's going to have to be building to defend against those missiles and to defend against drones. Everyone's realized that artillery is an important part of war, and Chemring are actually supplying those 155 millimeter shells for Germany. And they've even got the electronic warfare and anti-drone kits. So if you are foolish enough to go investing in defence stocks right now, I'd say Chemring are the best amongst them. I hope you found this video useful, and speak to you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.